What is a Schedule K-1 on TaxAct? Hi everyone, this is Alana from Create, Login and Delete. Let's jump right into the video. Schedule K-1, Beneficiary's Share of Income Deductions Credit, is used to report a beneficiary's share of income deductions and credits from a trust or estate. It is a tax form used to report the income, deductions, and credits allocated to partners or shareholders of pass-through entities such as partnerships, S corporations, estates, and trusts. Partnerships, S corporations, estate, and trust are pass-through entities, meaning they don't pay income tax at the entity level. Instead, the income deductions and credits flow through the individual partners, shareholders, or beneficiaries who report them on their personal tax return. The Schedule K-1 reports each partner's or shareholder's share of the entity's income, deductions, and credits based on their ownership percentage or other allocation methods specified in the entity's governing documents. The Schedule K-1 includes various types of income such as ordinary business income, interest income, dividend income, rental income, and capital gains or losses. It also reports deductions such as depreciation, depletion, and certain expenses, as well as credits and other tax items. Partnerships, S corporations, and trusts are required to issue Schedule K-1 to each partner, shareholder, or beneficiary by tax filing deadline, usually March 15 for partnerships and S corporations and April 15 for estates and trusts. Recipients then use the information on Schedule K-1 to complete their own tax return. If you are a partner in a partnership, a shareholder in S corporation, or a beneficiary of an estate or trust, you will need to include the information from your Schedule K-1 when preparing your personal tax return. And that's it for this video. If you have any questions or confusions, do leave them on the comment section below, and don't forget to hit the like button and subscribe for more helpful tutorials.